And now, The Money Show
with Stephen Grootes on 702.
Let's walk the talk.
The Money Show with Stephen Grootes is brought to you by ABSA CIB, proud sponsor of the ABSA Africa Financial Markets Index 2025. Good evening, I'm Stephen Grootes, 8 minutes after 6. Welcome to the program. A day, I suppose, many people will remember for what happened with Amazon Web Services, AWS going down earlier in the day. This is one of those big international issues. A whole lot of services suddenly don't work. Snapchat didn't work. Lots of businesses suddenly found themselves facing all sorts of problems. Was recovered, and things did recover quite quickly. I'm sure there's that moment when a service that you always use, think, for example, if you're shut out of your bank, or if you are used to just WhatsApping all the time, as I am, or whatever, when it suddenly doesn't work, and you think to yourself, there's just that second in the back of your head, will it ever come back? What if it doesn't? I mean, I realize there's backup after something, stuck underneath the mountain somewhere. But what if it doesn't? Just that thought in your head. And then, of course, for a lot of companies, minute by minute, things that have to happen second by second, really. And suddenly their services are down, and that's just money, revenue they won't get back. I did laugh a little bit when I heard that Snapchat was one of the services affected. I have a teenage daughter, and my first response was, oh, shame. Because, the only thing that I would probably prefer more than Snapchat to go down would be Fortnite, the game. And it's just, one of those things. I was thinking, what services would you kind of like to never have to use again? Or could just go down. I mean, X would be a good example, I think. And which could you just not live without? And I was thinking about it for myself. So I have a son and a daughter, so Fortnite and Snapchat could go. SMSs could actually go. They don't really work on a server like that, but they could go for me because it's just corporate nonsense after corporate nonsense, by which I mean it's someone trying to sell me something. WhatsApp can stay. Wouldn't mind too much losing email. Would find it hard to be productive, but would probably make a plan. TikTok can absolutely go. Like, cheers, don't need you, bye. But what for you would be the ones that you absolutely need and the ones that you simply cannot do without? 011 883 0702 021 446 0567. And of course, voice notes on 072 702 1702. We'll hear from Salvador Anglada, the CEO of Optasia, the fintech company. They're listing here on the JSE soon. They're being valued at around 8 billion rand or so. We'll ask Salvador Anglada how they got to that valuation. Also, fintech is moving so quickly. How do you compete? I mean, yes, you might be sort of hip, hot and happening now, but what's going to happen in, say, 2 years? How do you make sure that you're always at the top? Very tricky to do that, I think. Obviously, people who spend a lot of time making sure that they are. I know Air Traffic Navigation Services spoke to John Perlman on 702 this afternoon about all of the problems that they have. We will just take that conversation on there. Conversations, of course, around how much it's costing our airlines, that so many of these procedures, these machine procedures, if you like, computer procedures that are used when you can't actually land a plane visually, when the pilot can't see too well simply because of the weather, which is really the problem that we're seeing at some airports now. It just seems to me that AT&S are not taking this particularly seriously. They're always saying, oh, well, we're working on it, or it's only just lapsed. You had 5 years notice. I mean, most private companies don't let anything lapse because they lose money. And that surely is the issue we need to look at. We'll talk about psychological safety in the age of AI. The way the world is changing so quickly around AI, I think there's a lot of AI anxiety. That's one thing. I think there are other issues that come out about it as well. And one of them has got to be, if you don't use AI properly, is your company going to just fall behind? And that surely is one of the concerns that you would have. And then we'll speak to Daniel Mminele, someone who's played an important role in many parts of our society as well, of course. We'll talk to him tonight. He is chair of the B20 South Africa Energy Mix and Just Transition Task Force. We'll talk a little bit about the just transition and how that's working. There's so many different elements to that. So I think that's going to be an important conversation. Don't forget, by the way, from 7:30, My Money tonight. We will be looking at the gym company Planet Fitness, and in fact the co-founder and managing director of Planet Fitness, Mani de Wet, will be in the studio. Really looking forward to that conversation. It's a company that's done extraordinarily well and been able to really make a big difference. Good to hear from you tonight. 011 883 0702 021 446 0567 and 072 702 1702. And in fact, just while we talk about gyms, it would be good to hear from you on the subject, because I know some people who really feel that they've given up on gyms. I'm one of the people who sort of kind of gave up on gyms really after the pandemic and to do other things, prefer to cycle, etc. I know others who can't live without going to the gym. And there are all sorts of things that the gym gives them. And I don't know what it is for you that makes you decide to go to a gym or not go to a gym. I know some people who just for the life of them would do anything rather than having to share a change room. I know plenty of other people who are pretty keen, actually, on just using the showers because they're such good quality, you know, and that's the setting point for them. Might be a particular machine, might be a particular instructor. What is it for you that makes you go to the gym that you go to or not go to? 011 883 0702 and 021 446 0567. Good evening, 13 after 6.
Stephen Grootes
Taking your calls
on 011 883
0702.
Well, more commentary from the aviation industry about the money they're losing because of air traffic navigation services, which is not able to allow a large number of procedures for airlines to use at certain airports. As a result, when the weather is bad, planes can't take off and land at these airports. And it includes, for example, the airport, Bombela, the Kruger National Park. It includes airports in the Eastern Cape. It's had a huge impact. And earlier today, the spokesperson for Air Traffic Navigation Services spoke to 702's John Perlman, and Pilo Dlamini spoke to John this afternoon.
There are so many procedures across the country that, lapse in terms of their timing. So these particular procedures, their 5-year period, came to an end about a week ago. So,
but that's the part I don't understand, Mr. Dlamini. I mean, when a 5-year procedure is coming to an end, you've got 5 years in which to prepare. I mean, what went wrong that allowed this to reach the point of lapse?
I think it goes back to the point that I've mentioned, that our critical skills have been stretched across the country to an extent that Mpumalanga came to a point where we had to suspend them before we could update and get approval from the regulator.
Mpilo Dlamini there, the spokesperson for Air Traffic Navigation Services. Listening to that, Lyndon Burns is the aviation expert and managing director of Plane Talking. Lyndon, good afternoon to you. We've heard the song from AT&S before. It's almost as if they did not realize that all of these procedures would lapse and there'll be such severe consequences for our aviation industry.
Stephen, hi. Thanks for having me on, and hi to everyone who's listening. So this goes back 2 years now. The International Civil Aviation Organization, the UN body that sets the standards for civil aviation worldwide, came and did an audit of South Africa in 2022-23, and they flagged up to the South African Civil Aviation Authority, which is the oversight body of all activity involving civil aviation, and it is meant to apply oversight on AT&S as well, and said, hey, we're a bit worried here. We see there's a lot of these instrument flight procedures that, haven't been renewed. And so Civil Aviation Authority gave AT&S, gave them a year to get their house in order. And that deadline lapsed in mid-July last year, that extended deadline. And so they withdrew 226 procedures around the country. Because that way, you can't make a finding against something that has been withdrawn. And they said at the time, we will clear this backlog of 226 procedures by the end of 2025, which is coming up soon. Now, before coming on your show, I did a quick check on the daily notices to airmen, which is a circular published every day. And there are still 208 lapsed or 208 withdrawn and suspended procedures around the country. What has happened is that they've managed to renew, I think it's 26 out of the 226. But in the meantime, a whole bunch of others that were coming up for renewal never got attended to, and those are the additional ones they've now thrown into the suspended pot. For Kruger and Mpumalanga, for Polokwane, for Port Elizabeth, and for Kimberley. So, we're kind of digging a hole in the loose sand on the beach, and as soon as they're clearing it, it's filling in. And frankly, it's indefensible now. The transport minister suspended the CEO of ATNS a year ago after it became clear that they hadn't done this work for up to 12 years, and appointed a special task group or task committee to get their hands on it. But the progress has been glacial, and I've just come back from Lusaka at the Airlines Association of Southern Africa annual summit, where ATNS actually gave a presentation, and it wasn't well received, I can tell you that. And the CEO of the Airlines Association, as you said, and I'm quoting him here, the failure to design, manage and maintain airspace cannot be dismissed as an inconvenience. Government needs to see it for what it is, an economic disaster which demands a commensurate emergency disaster response. The lack of urgency reflected in the glacial pace at which approval renewals are being processed reflects this.
It is
so you can't say it any clearer. Now, Steve, just to give you some numbers, I checked with the CEO of Airlink this afternoon, again about an hour ago. Since the 8th of October, which was when the additional procedures were suspended, they've had just shy of 4,000 inconvenienced passengers. 2,300 of those were on flights that had to be cancelled, and 1,610 were on flights that were delayed. Now, I know that other airlines have also been affected because these are not, they're not the only ones that operate to Kruger and Mpumalanga or to Port Elizabeth or to Kimberley or many of the other airports. And the tragedy is that this affects so many economically fragile places around the country, or fragile economies around the country, like Richards Bay, for example. And more flights to Richards Bay have been cancelled in the last few weeks than have actually managed to have actually been operated.
Sure. I mean, that's astonishing. You make the claim, other people in the aviation industry that you've just quoted making the claim that it's glacial, the progress. I mean, ATNS keeps making the same point. We don't have enough skills. We don't have enough people. Now, I understand that that's a problem. I understand that the rand is no match for the almighty dollar, or what used to be the almighty dollar. But surely this was foreseeable, and there must be a way to do it. I mean, there must be a way to sort this out.
There is. Look, these skills are highly sought after. There is a global shortage of air traffic controllers and airspace designers. But industry have said we're willing to put our hands in our pockets and help, and if needs be, hire the right people for ATNS, because we've got to get this sorted. We can't continue. Now, again, there's also a financial cost element to this. And again, this is Airlink's numbers. They are spending at this stage around 9 million rand a month on unbudgeted for additional fuel. That's just fuel. Add to that the additional expense of flight duty time for your staff, your aircrew, plus the additional aircraft and engine maintenance and wear and tear, plus the reputational harm, of course, to the airlines, because they're the ones that have to face up to the customers. Then there's the customer compensation and reaccommodation when you can't get a customer to where they've got to get to, and in some cases hotel accommodation or buses or whatever. Then you've got the administrative side. Then, of course, there's the gall that you've still got to pay ATNS for their service, which they haven't provided. And then, as I said before, the socioeconomic damage and harm being done across the country. And there is no excuse, frankly.
I can't recall if it was you who made the point, Lyndon, but others might well have, that ATNS is very quick to cancel services to an airline if they do not pay immediately. One presumes that there's no way for the airlines to get money back from ATNS. It only goes one way, which is maybe one of the problems here.
It is, and there's statutory charges, and the regulations and legislation would have to be amended or perhaps challenged in order to get some sort of compensation or clawback. It is a problem in that respect, and coming back to the issue around resources, yes, I have some sympathy that they don't have the resources, but as you rightly pointed out, this was not something that came as a surprise. They didn't get up in the morning and just all of a sudden realize that, that they don't have these resources. It's been a steady drain. And some of it brought on by COVID, some of it brought on by, hiring and firing policies within ATNS and within our government as well.
Lyndon Burns, thank you so much. Really appreciate it. Aviation expert, managing director of Plane Talking.
702.
702.
Stephen is on X.
At Stephen Grootes.
23 after 6. More details today from the fintech group Optasia about how it's going to list on the JSE. It's confirmed its share price for its initial public offering will be from 15 Rand 50 to 19 Rand a share. Salvador Anglada is the CEO at Optasia. Salvador, good evening to you. You're still going through the book build process. It looks like your company is, on this valuation, worth around 8 billion rand. How did you come to that range?
Good evening, everybody. This is a normal process. You look at, first of all, what is the market sentiment at one point, but also you talk with potential investors, trying to understand also what is the other peers what are the range and they are having their shares, and is an effort that allowed us to come with a range that we believe is going to be attractive enough and provide also a lot of space for the company and the shares to grow in the future. And this is why we create this range.
Why should, there are other fintech companies. What do you think makes you stand out from the others? Why should investors put money with you?
Well, I think we are a bit different. We are maybe the leading AI-driven fintech platform for credit, microcredit in the world, definitely in emerging markets. We are coming here to solve a problem that exists in those markets. You have more than 2 billion people in the world that are underbanked. They don't have a bank account. They are underserved. No one is able to provide credit or financial services related to loans and credits. And this is where Optasia comes in. We've been in the market for 13 years. We started with what we call airtime credit solution, and then we moved towards a microfinance, small credits that people can take in those markets. We do not ask for any collateral. We do not ask for any warranty. We do not even charge compound interest if the customers are not paying or blacklisting them. We are really, really helping those economies, those people, and those countries to evolve. Today, we are in close to 40 countries. We have 130 million unique customers every month. We are providing more than $13 million a day of loans, and we make credit decisions of above 30 million every single day, 30 million credit decisions. So we are able to provide credit at scale. And the beauty of that is what we are able, just because we really trust on our algorithms, we are able to underwrite the whole risk. So Optasia is responsible for the risk if the customers are not paying. It's quite unique and it's growing very fast in the market.
Fintech is changing very quickly. It's changing very quickly across Africa. Your company's changing very quickly and leading some of that change. How do you see the market and your place in it evolving over time?
No, for us, the most important thing is to have discover and take a position in a market that was not existing. I think we are the first, we are entering first in this market. We are a market creator, being able to provide this credit to the low end of the pyramid. No one is able to provide that credit to those people. Even the traditional banks, they are not able to provide this service in a cost-effective way. And I believe we are coming here to solve that specific issue, to cover that specific gap. And also, I think what is important about Optasia and the people that are going to invest, that it's not only that, we are creating a very profitable business with a very nice prospect for the future, but also that it's a business with purpose. It's a business with soul. At the time that we're doing business and we're solving some big issues for people that if not, they would not be able to solve some of their small working capital issues or some of the needs that they may have at one point of time. So, we believe that the market will continue evolving, but it will continue evolving, expanding this type of services across the different geographies.
The amount of revenue you generate has been growing very quickly. And in fact, your revenue was up by over 90% in your last 6-month period. Do you think that kind of momentum, that level of momentum, nearly doubling, is that going to continue?
Well, what we provide as guidance is that we will continue growing, and what we say that we will continue growing in the coming years, 25 plus. So, mid 20%, and this is going to happen in the next years. Yes, we believe that we can double the business in the next 2 to 3 years average, and maybe the growth, it will not as explosive as the one that we have in this first half of the year, but definitely we're going to have a steady growth both in revenues but also in profitability. This is the forecast that we have.
Thank you very much indeed. Salvador Anglada is the CEO at Optasia on The Money Show tonight.
The Money Show.
The markets.
Gustav Schillenberg's a portfolio manager at the Old Mutual Investment Group. Gustav, good evening. Strong talk there, very optimistic talk from Optasia's CEO.
Yeah, good evening, Stephen, and hi, listeners. Yeah, certainly very exciting.
I'm just going to ask you to move around, Gustav. We can hardly hear you there on that line. Let's just see if we're able to strengthen the way in which you sound there. Gustav, you were saying it sounds very exciting.
Yeah, can you hear?
I know you're in Cape Town. I know you've had some weather issues in Cape Town recently, Gustav. I think we're just going to see if we're able to get you back on perhaps a different line. And just to strengthen the sound on that. Sorry about that, but obviously, let's just see if we can hear him now. Gustav, all right, I think we've got you. Yeah, that's a lot better. Optasia, you were saying it's exciting.
It is, yeah. It's exciting. The fantastic thing is we always love new listings and expanding the market, giving investors new ideas. And this business is obviously growing exponentially. Very interesting operations in Africa with the microfinancing and airtime sales. So, I look forward to watching this exponential growth.
A slightly lower oil price today. It does seem the market is worried a little bit about a glut, and I mean, you obviously hope that and a stronger rand might have a nice result for us. But that does tell us how people who buy oil are seeing the global economy.
It is. We find it interesting where the oil price is, given the conflict in the region and kind of how economic growth is holding up. But it does tell you that there's players in that market that are happy to keep the price low by having strong supply pipelines. But as you say, it's with a stronger rand and a low oil price. That could be very stimulative and very positive for the SA consumer and SA economy.
And then, obviously, there's a little bit of discussion I've noticed in international markets about the lack of official data in the US. Some numbers are coming out. This is obviously because of the shutdown of the US federal government. At some point, that's going to be a bigger issue.
Yes, it's interesting. It seems like the market only gets a fright once. And you remember this happened a few years ago. And the market had a very different reaction. The market's kind of been a bit blasé about it, which, could be concerning. I think they're still talking about getting the CPI numbers out this week. But, previously it's been resolved relatively easily. I think the market is assuming that'll happen now. But you know how it goes. As soon as there's that assumption, then that's where the risk is.
Gustav Schillenberg, thanks very much indeed, portfolio manager at the Old Mutual Investment Group.
WhatsApp Stephen
On 072
702
1702.
22 minutes to 22 minutes to 7, I should say, on The Money Show. A couple of conversations we've been having tonight. What is it that makes you go to a gym? What is it that makes you not go to a gym? Also talking about which online service would you like to see go? Which ones could you not live without? I can't live without WhatsApp. Could happily do away with things like Snapchat and could even do away with email, frankly. Responses tonight.
Hey, Steven, Jim. Me, sorry. I've been having my gym membership prior 2010, I think 2005. For Vitality Discovery, and I think we are one of those lucky fish that those who took the membership prior then, membership is for free, literally, provided that I attend the gym 3 times a month. So technically, I don't go to the gym. I'm on the street, but I make sure that at least 3 times in a month I need to be at the gym just to do a few things. But yeah, I just want to keep my gym.
Good evening. I could do without Instagram. Instagram can go. Everyone there is pretentious anyway. ChatGPT absolutely needs to stay. And I disagree with you on TikTok. TikTok is entertainment gold. So I work in a finance team for a company that has, and probably at that stage had around 350 employees. And our email went down over the period in which we need to do payroll. And it was one of those cycles where there were big things going around, like increases or bonuses. And we literally ran payroll via WhatsApp that month.
Yeah, you can do amazing things by WhatsApp. I mean, you can send bigger files, much bigger attachments on WhatsApp than you can on most email systems. I mean, email will be maybe 25 megabytes on Gmail, which I know is widely used. Whereas on WhatsApp, it's 2 gigabytes. I mean, that's a movie. Not that you should be sending movies to each other on WhatsApp. I'm sorry to disagree with you on TikTok. I'm just like the mindlessness, the sort of, oh, no, please, can I read a book? How old am I? And then, but it is amazing what you can do on WhatsApp. And as for gyms, you know, I belong to one of the gym chains for a long, long time, pretty much for the same reason. And when the pandemic came, I actually just went and did other things. That's really what happened. All right, good to hear from you tonight on that. On 011 883 0702 021 446 0567. And, of course, voice notes on 072 702 1702.
The Money Show.
With Stephen Grootes. Live on 92.7 and 106 FM. Streaming on the Prime Media Plus app.
And DSTV channel 856.
Just gone 7:15 the time. And, of course, plenty of conversations tonight about what's happening with gyms, with services that are not working. We'll talk about AI in just a second. Also looking forward to speaking to Daniel Mminele in just a moment as well, the chair of the B20 South Africa Energy Mix and Just Transition Task Force. There's so many different issues happening there. Well, I think there's probably now general agreement that artificial intelligence or some form of it is going to change the work that you do in some way. It might just be the thing that writes reports for you. I presume AI will read them too. It might be the thing that actually does the majority of the brain work that you do now and you supervise it, but it's clear a lot's going to change. Along with that, our conversations are here around psychological safety. Professor Jefferson Eugen Chen is on the faculty at Gibbs and a consultant at Forward Notion Advisory. Prof, good evening. How do you define psychological safety? Why is it so important now at the beginning of the AI era?
Hey, Stephen, thank you so much for inviting me. So there are many definitions out there, but I would like to quote Professor Amy Edmondson from Harvard. She believes that psychological safety is a shared belief that a group of people, a team, that make you feel safe to take some sort of interpersonal risk without the fear of punishment, humiliation, whenever you speak up your ideas, question, concern, and mistakes. So that's generally the definition we go by.
So that would mean, for example, if you're in a work team of people, you have to have the confidence, you have to be able to say, let's try this, let's try that, or to just try it yourself and see what the result is. And if you don't have that confidence, then you have a problem.
Absolutely. Confidence is one thing, but having said that, as a team member, as a leader, we need to nurture an environment that allows people to speak up. And unfortunately, you know, since Professor Edmondson's TED Talk 11 years ago, there are 2 million views on her TED Talk. You should go watch it. It's amazing. But lots of people don't seem to understand the essence of psychological safety, and some of them start butchering them. It's beyond just self-confidence. It's also nurturing an environment where your manager and yourself and your peer all have equal responsibility.
Why does it matter more in an age of AI? And I presume that's because we're about to go through and are going through an era of very quick change.
So I think you and I probably feel the same way. We want to do the thinking work and let AI do the laundry for us. Unfortunately, life is the other way around now. AI will be there to assist you, to accelerate your thinking, to be your thinking partner. However, just like any new innovation into the organization, into the world, some people are more ahead, some people are more behind. And those people who are feeling behind, we shouldn't make them feel threatened in any sort of way.
How do we go about doing that? I mean, I think some people might just feel, oh, I'm too old to do this, or I'm the weak person in my team and I would survive without AI, but with AI, I'll be the first to go. I mean, these are people who I think will fear that they will think that their fear is very legitimate.
Yeah, absolutely. But let's take a few steps back. Firstly, psychological safety is not about you using it as a term to dodge your accountability. Like, Stephen, you're my manager, you say, hey, I need to go and learn AI and all that. And when I don't do it well, I don't want to do it, and I use psychological safety as an excuse for me to not doing a good job. Or you and I have this disagreement about how I use AI or how I do certain things. But because I don't like your style of engaging with me, I throw this big buzzword of psychological safety. And lastly but not least, I think there are many factors. But in terms of going around it is, hey, we don't have to know everything. Not all of us know everything. And sometimes some people, some leaders believe that the higher they go, they must know everything. And we must actually understand that the world is changing so fast right now. And it is okay not knowing everything. And it's okay for us to help others.
I mean, I always remember the first time I went to a doctor's and the doctor actually looked something up online and in a book before making a diagnosis. Whereas in the past, 20 years ago, a doctor would just sit off their head. They're much better when they can check online first.
Absolutely. And one thing about being a great leader is you need to make your decisions based on facts. And of course, we need to fact check the AI and your agentic AI. Some of their advice might not always be true. And that itself is another conversation for another day. However, I believe that I'd rather have my leaders and my subordinates spending time engaging with the AI through different type of prompts to ensure that we get the right fact before we decide how to innovate or how to strategize.
What do the leaders in teams need to be focusing on then? They need to be focusing on people. They need to be managing this change quite carefully.
Yes. Well, this is quite a big change for some people. There are lots of the fears are actually, I work with some company doing large-scale transformation in terms of adopting AI. But if we make it fun for people, make it realize that actually there's something for each and every one of us, and make sure that your conversation is transparent. And one of the big things in people's minds, will they be replaced by AI or will they report to AI? But what leaders really need to do is to make it as transparent as possible, make it engaging, and make sure in the end of the day, people know that by adopting AI, there's some benefit for them.
Professor, thank you so much. Professor Jefferson Yu-Chen Chen is on the faculty at Gibbs and a consultant at Forward Notion Advisory. 8 minutes to 7.
The Money Show with Stephen Grootes is brought to you by ABSA CIB, proud sponsor of the ABSA Africa Financial Markets Index 2025.
6 minutes now to 7. You would have seen all of the reaction from the announcement by our Electricity and Energy Minister, Kgosientsho Ramokgopa, about our planned energy mix. There's a bigger role for solar and wind power, a bigger role for gas and nuclear energy, and we'll talk a little bit more about it in a few minutes. But first, a reminder that this is all part of a much bigger transition that's taking place in Africa. And Africa is moving in some ways more quickly than other parts of the world, and in some ways a lot more slowly than in other parts of the world. Daniel Mminele is the B20 South Africa Energy Mix and Just Transition Task Force Chair. As you know, he's played many other roles in our business and society, or the worlds of our business and our society. Daniel, good evening. It's good to talk to you again on The Money Show. Thank you. You suggest there's a big opportunity here for our continent. What opportunities are there from the Just Transition?
Hi, Stephen. Thanks for having me on your program, and nice to talk to you again, and good evening to your listeners as well. I guess from the point of view of the task force of the G20 that I had the privilege of chairing that you just referred to, there are really two key overarching issues, I would say. I think the first one is the opportunity to change the conversation and making sure that Africa and I guess emerging markets and developing economies generally are no longer just recipients of policies that are designed elsewhere, but are becoming an integral part of these conversations. So here's an opportunity to amplify Africa's voice, to become a co-creator, to become a participant in a decision making, and make sure that we're not just talked about, but that we are part of the conversation. So that's the first bit, that we actually, if you wish, come off the menu and are at the table. But the second one, which is also critically important, is that here's an opportunity that we can use as we all sort of are needing to transition our economies to low carbon economies and make our societies generally more climate resilient, to use this process to inform, if you wish, a new growth and development model. What does this mean? That we recognize that, as we retool our economies, and there is huge opportunity in the global energy transition, a commercial opportunity, industrial opportunity to support GDP growth, to create jobs, reduce inequalities, and deal with some of the systemic challenges that we are facing. So the recommendations that we made in the task team are really geared towards what we refer to as the $11 trillion opportunity that this energy transition represents, and that Africa must take advantage of these opportunities and play its rightful role.
In a way, this is really about capital, making sure there's money to finance this, and finding the money is probably going to be the biggest problem.
I think you're right, and that's why of the three key recommendations we make, the first one and the priority one is really about mobilizing sustainable energy transition finance at the scale, at the speed, and on the right terms, because everything stands and falls with finance. So while we have seen in recent years sort of global transition finance growing quite rapidly, it still remains below the need, and it's still skewed in terms of where this finance flows. For instance, emerging markets would require about $2.4 trillion annually by 2030, but currently only receive a fraction of that, at most about 10 to 25% of it. And so there's high capital costs, there are weak pipelines, there's limited concessional flows that are slowing, the investment that is needed. So indeed, finance is absolutely critical to this.
I'm sure you saw that comment from the Reserve Bank Deputy Governor Fundi Chazibana in the UK last week. She said central banks should help with the fight against climate change, but not at the risk of their credibility. In other words, they shouldn't weaken their commitment to low inflation. I presume you would agree with that sentiment?
I would tend to agree with that. And I think what history has basically shown us is that, of course, central banks need to be, just like any other business, if you think about it, need to be alive to the context within which they operate and evolve appropriately and respond to whatever new challenges might come about. But history has actually shown us that typically central banks tend to be successful at what they do when they have clearly defined and relatively narrow mandates. And so the issue I think that the Deputy Governor was pointing to is that let's just make sure that in trying to plug, one hole or resolve one issue, we don't open up a bigger one inadvertently.
Daniel Mminele, I really appreciate the time. Thank you very much indeed. The B20 South Africa Energy Mix and Just Transition Task Force Chair, and of course the G20 getting closer and closer towards the end of November. We'll talk more about electricity with Jose Maleshe in a moment. 52 big questions for business leaders also coming up. And don't forget the co-founder and managing director of Planet Fitness, Mani Devetti. With The Money Show, good evening, 7 o'clock.
The Money Show with Stephen Grootes is brought to you by Absa CIB, proud sponsor of the Absa Africa Financial Markets Index 2025.
And now, The Money Show
with Stephen Grootes on 702
Let's walk the talk.
6 minutes after 7, good evening. I'm Stephen Grootes. Well, plenty to come. Jose Mminele, the energy expert, an expert on finance as well, will give you her view about the big announcement by Jose Ramokgopa yesterday. And Dr. Ramokgopa, obviously including nuclear, including gas, excuse me, talk for the first time in years of the pebble bed modular reactor. If you're a child of the 70s and 80s, you will remember how interesting that was 20 years ago, and then seemed to just disappear around 2010, I think. Government cancelled the actual funding for that, and that seemed to put the whole project back in abeyance. So we'll talk a little bit about that in just a moment. Also, talking about 52 big questions for business leaders. Mike Stopforth is the author of that book. Just a very interesting way of looking at things. So many different books on leadership around CEOs and all the rest. This is a different way to kind of motivate teams. And then I'm fairly certain that's him behind me in the studio, sitting in the waiting room right now. But Mani Devet, the co-founder and managing director of Planet Fitness, looking forward to his conversation with you from around 7:30, how he makes his money. He was there as the first branch of Planet Fitness opened in 1995. So much has changed since then, and he's been a big part of it. Looking forward to that conversation. Good to hear from you as well on 011 883 0702 and 021 446 0567. Voice notes too on your gym and other things on 072 702 1702.
The Money Show
with Stephen Grootes, live on 92.7 and 106 FM, streaming on the Prime Media Plus app
and DSTV channel 856.
So big announcements from the Electricity and Energy Minister, Jose Ramokgopa, yesterday about where we're going to get our electricity from in the future. He says the new Integrated Resources Plan will see us getting more than half of our power from renewable and nuclear energy within the next 15 years. Jose Mminele is an energy expert. Jose, good evening. The minister says this is a rupture with policy, that this will really change the way we get our power. Do you think he's right to say that?
It depends on whether or not what we spell out as a plan becomes successful. But indeed, there's a significant change in direction towards the cleaner technologies, if I can put it that way. Yes. So yes and no.
I mean, this takes us to the bigger problem with a plan like this. It's over a long period. So much is changing in the electricity space so quickly. You have to plan for the long term. Otherwise, as we know, you end up in load shedding disaster. And yet planning has possibly never been more difficult.
It's true. You have to plan infrastructure as a long-term game. You have to plan well ahead of time. And I hope that with these plans going forward, that there's a more detailed, again, plans, because we know that in previous integrated resource plans, we have planned for things like INGA, which were never really going to be projects that are feasible. But to give credit a bit, there is some thought that has gone into how feasible these projects are within limits. So, but there's further work that needs to be done.
Government now looking at nuclear, and I realize the pebble bed modular nuclear reactor, but from what I could see, it doesn't seem to be properly proven yet, and there are other modular reactor designs as well. Is it possible to know if the pebble bed modular reactor is the right way to go? I mean, could there be better nuclear technologies?
Well, that is the reason why. So what has happened is that we have a period from now up to 2030 where we kind of continue as we've been going along with the coal-fired power fleet, plus post-2030 to 2039. That's when you are looking at these options. And what the minister is saying is that, yes, he's looking at potentially the new technology, which is these small modular reactors. I mean, there are more than 100 countries worldwide looking at them. To be fair, they are not yet fully commercialized, if I can put it that way, but there is a direction going that way. And in terms of South Africa, there are two considerations. Obviously, the one is already we have the installed capacity at Quebec, whose life has been extended. So that's part of that that he's counting, and then he's looking at a smaller reactor. In China, they have done these projects basing it on the technology that you correctly mentioned earlier on that we experimented with, but we got tired of it in terms of financing it. So in the end, the Chinese continued, and they've been pioneering that technology together with other countries like Russia, the US, France, and all of that. But commercial application is still very limited.
And gas, I mean, a lot of discussion about gas again, and we don't even really know if we actually have enough gas to use.
Yes, so there's an anticipation that gas would come in because you are now adding significant capacity from renewable energy sources, which you obviously have to back up with more flexible capacity. So gas is coming in, and in the past, there's been efforts to try and procure gas projects, but the gas sector has been saying that you are looking for capacity that are far lower than it justifies our investments. And so it sounds like that they've been listened to because the minister has increased the capacity factor, which is the time in which the gas will be available, in short, and to 50% or 51%. So we will see whether the market will respond positively to that, and there will be a need for gas. In the short term, it looks like it will be imports, but in the long run, indigenous resources will be looked at. If that becomes feasible, that will be a positive for South Africa, rather than relying on imports, because locally produced gas that we used to have in Mossel Bay was a rand-based commodity. And so that's very advantageous. But we still have to address exploration and production in the Southern Cape to be sure that will be able to do that.
So I made the point that government's trying to plan ahead. And and I would say 2 or 3 big things have changed. The one is that government just isn't as big as it used to be in the provision of electricity. Companies are building their own generation capacity. I'm sure that, some complexes, by which I mean residential complexes, are generating their own electricity. Things are moving very quickly. Can government really control what's going to happen? It must have less control now than it's ever had in the past. And that means the plan that has been announced, and I think will be gazetted on Friday, is probably, and I don't mean to be rude to the minister, this is not my intention, but is probably less likely to be implemented than any other IRP before it.
Yes, there's a large role that the private sector is playing, and the private sector will continue to play, but the majority of that is in the renewable energy sector. And to be able to ensure security of supply and reliability of supply, there needs to be baseload capacity. So that role cannot be overemphasized. There is a need for it. It can't only come from storage, which is battery storage. It needs to come from significant capacity, especially if you start decommissioning the coal-fired power plants. So that's where I see a role for government. In the procurement as well, government could continue to procure gas as they've been doing, but they'll have to do a lot of work to make sure that the private sector responds to that. So yes, it's going to be largely off balance sheet, but there's still a role. Nuclear generally tends to be government domain completely. It tends to be in the hands of government everywhere else in the world. So I think they'll still have a role to play there.
I mean, if you want to have smelters, you probably, in the upcoming age, probably do need nuclear.
Yes, you do need significant, like the minister was saying, if you look at the kind of plans that most of the countries have in terms of nuclear, it's quite significant. There's just an uncertainty with respect to commercial feasibility, but given the timelines, it's expected that should not be an issue in the longer term. And so, That is correct. You need it also data centers that are growing and gobbling up a lot of energy. The energy demand is increasing, so it's not reducing. So there will be a need for significant, reliable and cleaner supply of energy.
Jose Moleshe, thanks so much, the energy expert. Really appreciate the time. 16 after 7.
The Money Show.
Business books.
So many different books around about leadership in business, the CEO, the this, the that. But the first one that I've seen that does it in quite this way. It's called 52 Big Questions for Business Leaders. Discover the hidden power of questions to radically transform your strategy, your culture, your confidence, and yourself. It's by Mark Stopforth, and Mark joins us on the line now. Mike. Question for Stephen. Can you spell? No. Mike, good evening. Thanks so much for joining us. Why did you approach it in this particular way?
So thanks, Stephen. Thanks for having me on the show. I think I approached it this way because in my own experience in business and as an entrepreneur, answers have proven to be grossly overrated, and our instincts as business leaders often are to rush to solutions rather than engaging with the problem at depth. And I think one of the best tools for doing so is a well thought out, well curated question. And so having realized the utility of those questions in my own journey, decided to collect the very best decisions I'd ever been asked and had asked others. And this book is the result of that.
One of the things that I've noticed about questions, and it's kind of my job to ask people questions, is often it's, everyone always thinks of an interrogation. It's not that at all. What you're actually doing is trying to open the door to something.
Couldn't agree with you more. And, questions are a funny thing. We all assume that we can ask good questions because we've asked questions our whole life. It's a little bit like running, right? You ran as a toddler and you ran as a young kid, and then you get to being an adult and you walk responsibly everywhere, and so you decide to get fit, and then you run again, and you suddenly realize that running as a skill is actually something to be worked on and developed. And if you don't run properly, you get injured. And questions are a little bit the same, I think. They instinctively are something that we all believe we do well, but are worth engaging with on a much deeper level to understand what makes a great question indeed a great question.
I mean, for a book like this, you'd have to think quite carefully about which topics you cover. How did you go about deciding on that? I mean, yes, you've got lots of experience. There must have been some stuff you probably had to leave out. So it must have been quite difficult in some cases.
Definitely. Well, it actually worked the other way around. Stephen, we started with the questions, collected over 100 of the best questions we believe belonged in the final manuscript, and then whittled it down to 52 and realized that there were these themes that ran through the questions. And those themes, unsurprisingly, related to core fundamentals in business, or core focus of business areas. So we had sections like leadership and vision, or people and culture, self-improvement and development, all kind of stemming from these golden threads. And so it almost worked the other way around. We started with what makes a great question. We collected those questions, and then the themes or sections emerged out of those.
You provide a sort of answer, right? So, I mean, as an example of a question, why do good people leave my business? Great question. And you have, a little bit of sort of answer. Are you trying to guide a conversation when you do that? I mean, you don't want to close down a conversation. You want to make sure that it stays open. But, I mean, are you trying to sort of guide it?
What I've tried to do is add in deeper consideration. So assuming we start with a question like, why would good people leave my business? It demands deeper thinking. What do I consider to be a good person? What do I consider good talent to look like? And then why would somebody as valuable as that consider leaving my business, even though I'm trying really hard to make it a place that they want to stay in? And so these types of questions, I think, when they are assimilated into groups or shared with a leadership team, or maybe even used as a meeting icebreaker, can be a really profound way to sort of open up thinking and get those cognitive cogs turning. And I think that does certainly promote a level of vulnerability and openness that is often missing from those types of engagements.
I get the sense that the demands made of our leaders are changing very, very quickly. There's a lot that, 20 years ago, you could probably get by being very good at finance and not being too rude to workers. Life has changed a lot since then, and so it should. Do you think your questions are going to adapt well? Are they going to age well, to use that phrase? I mean, I can see you put a lot of thought of it, so I'd expect them to.
One would certainly hope so. I think I tried really hard to ignore many of my own biases coming from a particular industry or a particular set of experiences and make them as broadly applicable to, first of all, a wide range of leadership types, so leaders who come from very different backgrounds and cultural viewpoints or belief systems. Second of all, industry sectors. So while I might be biased to marketing and communications, I hope the questions in the book would be as applicable to somebody who comes from a legal or finance background. And then finally, as you say, I could ask questions around how do I think about the positive impacts of AI in my future as an innovative organization. And that's a question to ask, but I feel like it's a very topical question, and as tempting as it can be to do that when you're writing a book that you hope people will recognize and buy, I think the real value is in questions that stand the test of time and that apply to any set of problems, circumstances, or uncertainties, the likes of which I think we are becoming quite accustomed to having to face.
Any particular questions, Mike, that really jumped out at you, that made you think, actually, this is one of the key things? And I realize that's probably an impossible question. There are 52 of them. But there must have been one or two that you just kept coming back to again and again because you thought the answer is so interesting, or it starts a particular chain of thought that you thought was perhaps a bit more fundamental than some of the others.
Yeah, great question, Steve. There is a momentum to leadership that is often difficult to pause. There is a rhythm to having to keep up with decisions, keep people motivated, keep the numbers moving. That means that you very seldom stop and take stock. And that doesn't necessarily mean stopping to take stock and congratulate yourself, or even, stopping to take stock and be negative about the situation, but simply stopping to look and survey and consider. I had to chuckle. I was watching a movie the other day on the plane, The Darkest Hour, which is that Winston Churchill biopic, which is a wonderful performance by Gary Oldman, and I was struck by how many times in that movie he just sits and thinks. And I thought, in a time before being able to scroll through X or look at Instagram or read News 24, we had to just sit and think a lot. And there's a sense that skill in its own right, the willingness to pause and consider and mull over things in detail, we've lost a little bit of that. And I think some of the quality of our thinking has degraded with that. And so this book is a commitment to my own journey to better thinking, but hopefully a call to action for leaders who want to think deeper and want to come up with better solutions as a direct result of that thinking.
That's such an interesting point, Mike Stopfall. Thank you very much. Really appreciate it. Author of 52 Big Questions for Business Leaders. An interesting point about how we just don't stop and think. All we do is scroll 26 minutes after 7.